The first thing to do when it comes to geopolitics is to do nothing, is to watch, absorb and try to understand what the playing field is here, what the ramifications are. Bitcoin is currently trading at $38,700, which is down 10% in the past 7 days, while Ethereum is down 12% in the past 7 days, trading at $2,550 at the time of writing. The market seems to be stagnant as of late, as all eyes are glued to the conflict between Ukraine and Russia, with many experts, analysts and investors unsure of how this will play out and what implications it will have across markets. Last week, when asked about the Ukrain-Russia conflict, macro analyst Raoul Pal stated that although he was enticed to speak on the situation, he respectfully declined to comment because he wanted to better understand what was going on before sharing his thoughts. Well, now it appears that he has a better pulse of what's going on, as Raoul shared his thoughts in a 25-minute impromptu message to update his followers on the current geopolitical events and what to do in the markets. In his message, Raoul highlighted that from his perspective this conflict can go one of three ways. Number 1, finding a common ground, which could look like an agreement to ceasefire or an agreement to split up the Ukraine, possibly have a West Ukraine and East Ukraine, something of that sort. Sanctions get eased off over time because everyone feels they've negotiated a settlement, which Raoul stated was the best situation in his opinion. Second scenario, the Ukrainians do not negotiate, don't surrender, and the Russians level Kiev. This was the highest probability situation in Raoul's opinion, and a bad situation because clearly the sanctions will not go away and can cause a huge global recession. Scenario 3, which Raoul considered the worst case scenario, is if Poland becomes a part of the war because they received an abundance of weaponry to give to Ukraine. Raoul would consider this now a war between Russia and NATO. Raoul warned that within the next 2 to 3 weeks we will know if we have scenario 1 or 2, or will scenario 3 come into play. Regardless, Raoul's overall message was not meant to be a doom and gloom, but to prepare people on what assets he believes will do really well to weather this geopolitical storm. Listen to Raoul's thoughts. The other issue in the geopolitics is everybody has now learned that the dollar is a liability, not an asset, so e-dollars can get taken away from you at will. So even though it looked like a very smart move to weaponize reserves and the financial system, what is actually happening is you are now forcing the de-dollarization of the world. Now my view on that is that's a slower process. Obviously Russia just got thrown out, but they've been planning for it. Let's be absolutely clear, Russians been planning it. They probably didn't imagine this fast, this apocalyptical, but the Chinese will be planning it too. The central bank digital currency is part of that planning, so everybody wants to move away from the dollar, and right now the instant thing that any central bank can do is own more gold. So I think this is a very bullish gold environment for central banks because that's what they do. It's an asset that they're comfortable with. I also find very concerning of the geopolitical level that we have frozen the assets of people that have not been tried in any sort of cause. Now it depends whether there's a confiscation going on here or freezing of assets. It depends on EU law and who's taking what, but it tells people that property ownership is not something that they perceive. If you own a property that's not in your jurisdiction, you don't own it. So I think that is again a shift that's going to take people's mindsets. Obviously all of these trends are very bullish for Bitcoin particularly, but the crypto world overall. Over time now crypto trades both as a risk asset and a store of value. The store of value element is becoming predominant right now and very clear on the risk aspect. Well, it's a bloody risky world out there, so let's wait and see China how that plays out. In all of this we don't know about. China's been moving towards separating, and I can't yet think of all of the ramifications as we are already splitting these worlds apart. If this gets accelerated, what does that do? But the world is a net debtor in dollar terms, and the more of these debts you start writing off by forcing people out or seeing defaults, the higher the dollar goes, and the dollar is a big risk here. So if you get a liquidity squeeze, the dollar goes up. The dollars are the one thing that I'm looking at, but we also know that the Fed try and stop that because they know the dollar is the wrecking ball. They can't let the dollar go up too fast, so they start supplying the world's banks with swap lines. So every time they've done that in the past, that eased the issue. But here you've taken out a very big economy. I mean, Russia is gigantic. Russia probably has more natural resources than the rest of the world added add together it's something of that magnitude, so the GDP may not be big but this asset base is enormous, and without that in the world we end up with a huge loss of trade. And we've also got these dollar liquidity issues which I think will bite the Europeans, by the US, and by everybody else, so I think that's all setting up to be a bit of a mess. The Fed will come in and try and flood the market with swap lines so the money printers start in different ways, and I know there's a lot of people watching school that's not money printing, it's enough to start changing the denominator effect of certain assets, so be cautious of that one. I actually like bonds in this environment because if you raise food and fuel and input costs you're destroying demand. We've already seen demand slowing globally, we're already seeing a lot of forward-looking indicators. I've written a lot in it and I wrote it up in the GMI that you all got. I think everybody got it. There's so some of my thinking about all of that, and I've been writing about that frequently in GMI and Macro Pro as well to talk about how that's playing out, but it's playing out exactly as expected. The world is starting to slow down now. The US is starting to slow down, bond yields are starting to come off, and I think even with higher prices, I know everyone thinks it's inflation, I think there's a massive tightening of monetary conditions and total demand destruction on lower middle class households, so I think that is a big problem coming, and I think bonds should fall in yield. And you know, right now us bonds are a safe haven, so there's safe haven flows that come into that as well. I think generally speaking bond yields should come down towards the 1% level, and let's see, are we building structural inflation by the changing of supply chains, or does that get solved by technology? You know, are factories that come from China using people that are moving to the US, using robots, inflationary or deflationary? Maybe it's inflation refers as you build them, and deflationary over time as the costs come down. As I said before, the digitization of anything tends to push costs down to zero over time, so I think that's going on. To watch the full interview, check out the link in the description. What do you think of Raoul's thoughts here? Leave a comment, and thanks for watching. We'll see you in the next video.